Hey, where's y'all's? Must not have been good stuff.
Little ASMR in the morning.
Oh, there you go. Should I here listen to this?
Mm-hmm.
Does this make you feel calm?
Back to
Okay, we're not gonna do
107.5 Smooth Jazz.
And then just throw some nails on chalkboard.
Some Kenny G in the morning.
Good morning, Vietnam.
Sponsored by Arbitrage Trade. All right, hey, I'm Darren with Arbitrage Trade. This is After the Bell. We have all four, the whole group. The Four Musketeers is in the house, even those from the Singapore Institute. Yay!
We like those guys.
It's even actually after the bell, and it's even actually Wednesday. So my guests are,
and the
I don't know. Every now and then, a clock is always right, even if it's stopped, right? Twice a day?
It's right twice.
Isn't that the saying? I don't know. So I'm Darren Harper. I am the retail resident guy who throws poo at people when I don't agree with him because I am dumb money and I'm an ape. We're going to get into that a little bit later, of course. We have Daniel, which is the
Josh is picking up the slack.
We'll talk about that too. Don't make me start throwing poo early. We have Daniel, who is the ex-institutional wealth manager, and he is also the one that likes to write this crap that we do every week. I mean, this stuff we do every week. And then we kind of go off of that. And then we have the banker, a.k.a. JPM, a.k.a. Josh Morgan. That is his real initials. And then we have the guy that started all this, and his name is Royce Wells. He is the creator of Pips, that amazing little AI bot we have that predicts things very accurately, 98% of the time. So it's all a matter of timing, not if, but when. So
but when.
There you go. There you go.
That's the hardest part about the market. Not if it'll happen, when it'll
That's
happen.
right. Was that Sheryl Crow, the hardest part? Is that the right? Didn't you sing that? I don't know. I'm testing my DJ.
Sheryl Crow, the first cut's the deepest? What?
The hardest part is, I don't know. All right, I'm not going to get into that. This is not a music show. Let me give the disclosures real quick. We are not financial advisors, and this is not financial advice. This information provided is surely for educational entertainment purposes only. Please always consult an investment professional before making any financial decisions. And I'll go ahead and add that if you're going to invest, make sure you set your limits and your stop losses. All right. So, and that's not advice. That's just for your entertainment only.
At all.
That's right. So, tail of the tape. Yeah, hopefully I haven't clicked off by now. So we have tail of the tape. We're going to talk about today. The tech is leading the way again. I mean, they tried to pretend like it was no longer a thing, that it's they've moved everything over to the Russell and everything is in the small caps. But what do you know? Today, everything's moving right back into tech. They just had enough of moving it, and now they're moving it back. And Bitcoin is doing a little something we'll talk about later too. And this is all after Powell talk today. And it was a big nothing burger like it usually is. But, I mean, he does his jawboning one way or another. Either he's a hawk or he's a dove. I don't know what you call it today. Kind of right in the middle, I guess, but mostly dovish, I would say. Hinting at there will be a September cut, which, I mean, if you look at it, 0.25 is not going to be much of anything. It's not going to really do anything. So, I mean, it's almost like not having a cut. They said that on the way up, so now we can say it on the way down when they start cutting. It's just all about narratives. So, what's going on here? We'll start with Josh. What's going on in the markets? What happened today? I mean, what went where and why?
I mean, like you said, not a lot. It really, you kind of hinted on that. All the metrics that came out is really, as far as if we're going to see the potential for a soft landing. I mean, the numbers were pretty much ideal for those conditions, ideal conditions where actually maybe we could see a soft landing. I know we'll touch on that a little bit later, but it kind of, what we're seeing now does align with what the numbers that they need. And again, if you have faith in those numbers, they do align. And it really was an ideal situation. Like, nothing could have worked out better for Powell, and I'm sure he's relieved, and every market was relieved. And you saw that in, some of the stock prices.
Well, stop reading my notes ahead of time. Daniel, give me your take. What's going on?
Homework, Daniel.
I will have nothing to say because everybody read the notes. Go ahead.
It sounded like Darren wanted to start making this agenda every week for us.
Oh,
But,
let's see.
But no, I mean, yeah, like it is one of those things where like 25 bips is a bit of like a nothing burger. But I think for the market and where it's been such a long time of, just rates being hiked and then being held for such a long time, and then the narrative always being that they're not going to be cut anytime soon, for things to look like we might finally get even some kind of cut shows that they are coming in the future. So even though right now, and even though it's small, it's kind of nothing to think about, it is like a forward-looking indicator of like, okay, maybe we're not about to get back down to like 0% rates, but we'll at least start to get away from 5, which, I think is kind of why you saw a bit of rotation back into tech away from, the small caps today.
Yes. I'm yawning. That's not me yawning. That's you yawning. Same as it ever was.
I assure you, I'm yawning. It is early here.
That's right. So, Royce, wrap it up here. Anything macro you want to say just about General Powell speaking and jawboning, etc.?
Well, pre-market, the market was already up about $6 or $7 bucks, like SPY was, Qs were, everybody was up, and so basically it was like business as usual. That's one of the reasons why I don't think a rate hike, a rate cut is coming, nor a rate hike. It's like, hey, as long as it's business as usual, why change the status quo? You know what happens when you leave the status quo for too long? Everyone gets used to it. So why change it? Why upset the horse, the cart, and everything else? Right?
Yep. Because Powell wants to get reelected.
Well, that's more than likely going to happen. But also, speaking of election, it's like, okay, we got new office coming in November. Once again, this is senioritis. Let's just get to the end of the railroad, or get to the end of the line, get to the end of the year, and everybody just goes home, graduate, get their diploma, get their cap and gown, and we're done. New administration comes in.
Yeah, you just have to hold status quo till then, right?
Yes, status quo until then.
Unless a black swan or white swan event happens, which they've been talking about for 2 years, but we've also been talking about a soft landing for 2 years, and I'm just tired of it. I'm sick of it. I can't even watch media anymore because that's
and not to make this every month or anything, but don't start nothing, won't be nothing.
Exactly.
I mean, I know status quo seems boring, but it's a hell of a lot better than the alternative. And the alternative would be some kind of catalyst for why the Fed had to cut rates. If you start getting like,
exactly.
Recession or something like that, like I nothing is something. Boring is fine in some instances like this, because you do get kind of comfortable and complacent, and God knows the market does not like uncertainty.
Yeah, for sure. And there's a lot of it coming, but everyone's just blinders on, happy.
It's all being pushed forward, and it's all being hidden, and it's all in reports that people don't look at every day. They don't show those reports that show it coming. I'm kind of giving away what I was going to talk about later. They're only showing the ones that match exactly what the narrative is right now with the Fed. But we'll get into that later.
Hey, come on, follow the. It's not fake news. It's not.
So let's move on to Trump was in Nashville after the whole event. He went to Nashville
immediately there
for a crypto conference, and basically he's Mr. Crypto. I don't know. That's crazy. Maybe the BTC stands for Bitcoin Trump Corporation. I don't know. But
is he the one that invented Bitcoin? That's a crazy conspiracy.
Just like Gore invented the internet, right?
He's going to say yes.
He loved what I and by the way, if you guys want to watch Daniel and I break this down later, we talk. Well, we actually already did, didn't we? The Bitcoin thing. But anyway, he talked about he loved it when he sold his NFTs, and so all of a sudden, right after he made some money off of those NFTs, hey, I'm a fan.
No, Darren. He saw the power of the underlying technology. Okay.
Yeah.
Oh, that was it. It just sounds like you've been trained by fun to say that.
And BTC, buy Trump coin. I can see that. I
there
see
you
it.
go. they would name that coin that. So Trump wants to make the U.S. basically the leader. I think there's a competition between China and the U.S. on who's going to be the biggest. And by By the way, just to go back a little bit, Daniel, you said that last week was your last time talking about Bitcoin, but I knew with the whole conference going on and how everything elevates your Bitcoin appleheadness that we would hear about it again. So
I mean, Darren, you had a choice between Bitcoin and Tesla. It's just in the news every week. I don't know what you want from me.
It really is. I could handle Tesla, I think, right now. But anyway, Trump also said, by the way, interesting point, that if he's hired, that Gary Gensler is going to be gone, which makes sense because Gensler has always been at least virtue signaling that he doesn't like Bitcoin, but secretly we know his past and crypto. So I think it's just people are playing roles here. Go ahead and anything you want to expand on that, Mr. Applehead,
Bitcoin
head, Applehead, whatever.
Come on.
What you got, Daniel?
Yeah,
by the way, make it quick.
I mean, so Trump said that he wanted to make the U.S. the crypto capital of the planet, and even RFK said in his speech that he wanted to build up a crypto reserve for the U.S. that would accumulate to something like 4 million Bitcoin, which I forget how many U.S. dollars that is, but really the right is polling for cryptocurrency. And I think it is good in the sense that, and I can't necessarily say I agree with the US government holding BTC as a reserve, but I think having an administration that's at least transparent and creating transparent regulation is important for the US to lead, because that's what's, even held a company like Coinbase back, that is super transparent, always been trying to work with the SEC, get regulation, and instead they just kind of get non-responses, and then they do something illegal when they were trying to prevent it the whole time. So although I, can't say I agree with what Trump or RFK stand for as a whole for Bitcoin, that side of the market, I say they're, pretty good. And just to your point, Darren, I do not believe that China is remotely a leader in crypto. They hate it more than the U.S. Virtue signals to dislike it. Because they kicked out all their miners like 2-3 years ago or something.
Yeah. And they put them to work. Oh, miners! I'm just kidding. That was different spelling.
CZ left China because he knew he'd be arrested like immediately there, but he still he turned himself in. But he was based in Singapore or Dubai, I think.
If we have any Chinese followers, we lost in these last 2 weeks.
I can't. I just can't.
Actually we do. I've looked at the stats. So
my lawyers have contacted me at least twice about you, sir.
You gotta get rid of that guy. Who's that guy?
This is the episode where Darren learns to bleep his jokes.
Man, that sounds like a lot of extra work. All right, I just want to give you a chance.
Then speak wisely, sir.
Since Mr. Singapore Institute wasn't here last week, I want to give you a chance to talk about Bitcoin on this. I don't really want to spread it around to the other two guys, although you guys have interjected. But Bitcoin is down to 64.7 now. So it is on its way down. So we'll have to see what happens. I mean, they got their pump. Now they're making their money by selling it, and that's the usual. It's still on that channel, 67, 64, down to, was it 55 next? I don't know. We've talked about it here before.
Last bottom and support, yeah.
Right. I remembered that. See, even this dumb ape remembers that.
I just also like to point out we call 55 as the bottom, and we call 67 as the top, just for the record.
That's what it basically,
before there were any announcements.
Yes, that's because Mr. AI bot tells us that. So the other thing was, and we actually talked about this a little earlier, but Bank of Japan raised their rates once again. This is crazy, up to 0.25 from 0.1. They do this little channel thing they announce, and then the yen did immediately respond, and then the dollar is sitting at 104 and going up a little bit since then. So all that happened. Royce, I'm gonna let you jump in and just, with all that in mind, what's going on?
It's beautiful. It's the most beautiful thing ever. So around March, April of this year, I basically said we needed the yen to outpace it out, but we needed both of them to go up. So where we are right now is basically right on schedule for where I said we were heading. where I was saying the dollar was heading to about 107 for the DXY index, and JXY needed to top over 66. And I think today was the first day it was actually over 66 for its value. So things are right on course. Japan is basically recovering. A lot of people thought that Japan would just lie down and not do anything, but it's slowly building up momentum and building up speed. I think there's a whole lot more. I think as Japan continues to raise its rates, it's actually going, and as America continues to not cut its rates, I do think that basically Japan will overtake the dollar and continue to overtake the dollar, as all of these pairs and all of these countries have been basically taking advantage of Japan for at least a good 3 years, as Japan and their negative interest rate was slowly diminishing the value of their yen. So, business as usual. Keep the status quo. Let's go.
Awesome. I'm just going to leave it at that. We'll move on to a subject I could do 4 hours on this, and probably have online in the past. But
this concludes our broadcast day.
Yes, that's right. All of a sudden, ooh, cue the American flag and the national anthem.
That's right.
That's how old I am. I remember those days. All right,
so banner, please.
Yes. So the title of this one is "Short Selling is Un-American." It probably could put a question mark after that.
What are you talking about? We're a capitalist nation. Get out of here.
Yes,
it's what Warren Buffett said.
Warren Buffett
really?
did say that. Yes,
that's what that's from. It's a Warren Buffett quote.
Wow.
He did say that. And I will add, by the way, that the Chinese also have recently done that. They have banned short selling. India has now done it. And South Koreans have really all over it. In fact, they have a huge investigation. They're talking about sending people to prison now for doing it. So there's a push, and whether it's virtue signaling or not, or it's just the right time to do it, which I think is virtue signaling, we'll see. I think, but South Korea has taken the lead in this, and U.S. did too, by the way, in quotes. This is what I mean by virtue signaling. Is 3 years ago they started back when the 2021 craziness happened with the meme stocks, they started a short selling investigation, and there was a fund up in Canada that got mixed up in it with Andrew Left. Yes. Andrew Left, and he was basically profiting off of manipulation, and this is what he's being charged with. He, of course, has said he's not guilty. And by the way, he's with the wonderful firm that the apes all love called Citron Research, who has put out so many negative pieces in the last 3 years. But that's part of it too, is the manipulation using negative media to drive a stock down. So there's a lot that's going to come out of that. But in 3 years,
you hear him, right? He's trying to get us canceled.
In 3 years, it's alleged. I said alleged. In 3 years, that's all we've gotten out of it. They're doing this huge investigation. Out of 3 years, it amounts to $16 million in some abstract fund out of Canada for $16 million for Andrew Left. And even Charlie Gasbag, Gassy Rhino, Charles Gasparino. Charles Gasparino gets on and he almost cries online and says that if they go after Left, then that means that everybody on CNBC should go after them too, because of being paid to go on to TV to push what they're doing. So who knows what's going to come out of this? Again, I think it's a bunch of virtue signaling, and I'll just leave it at that. Unless I am spurred to talk about more than just that, but I will just leave it at that. So I will go to my fellow ape first, who may or may not agree with me, because he was in all of this too since 21, I think. So talk to me, banker.
I don't know. I'm of two minds with this one. The first being, obviously, it's egregious. The whole short and distort things, or the pump and dump, and all of those things. Everybody is doing it. It just depends on how that particular group is labeled, like who if you get some kind of like trading group together and they're going to have some sort of knowledge about pumping this price up, and then within an hour or a day before it happens, there are going to be people that are going to pay them a higher subscription to come in and be like, hey, when are you going to kill the price on this? It's the same thing with like politicians and insider trading. I always use the analogy, like, guys, there's a reason that betting on sports is illegal, because the people that are actually playing the game and are currently in control of what happens, they're the ones that can't, they're not supposed to be able to gamble on said things. But then you look at, like, politicians are doing it, short sellers are doing it, like congressmen are doing it, the trading groups are doing it. Like, everybody is doing the same thing. It just depends on how you label it. But now we're finally getting some of these, like, venture capitalists and hedge funds and the hedge fund activists and short sell activists and things that, this cute label that they've applied to them now. But no, it's finally, I think we're starting to see people realizing, especially when the pandemic hit and all the influx of retail money came into the market, and people, and despite, like, back when GME was going, everybody kind of started really digging in, and the masses took over and really are starting to expose a lot of this that's been happening. And I think that's great, but I'm not gonna sit here and say that it's just this one guy. Like, everybody does the same thing. Like, if they can influence the stock price in one way or another, they absolutely would.
Yes, and I forgot to mention our favorite guy, Dougie Large, we call him, from Virtue Financial, who now has put out that he wants penny stocks basically to not be allowed on the markets, and anything, and technically anything under $5 is considered a penny stock. So he wants all those to go away. So, I mean, I don't want to jump in, and we'll do that on our deep dive, Daniel, but talk about how if someone has a lot of shorts invested in something, Citadel, that it's called shares bought or sold, but not yet paid for. And that's a big number. Like, at one time it was 65 billion with Citadel, and that's just what's put out there. And if they could eliminate these companies that they have those shorts in through getting rid of these penny stocks that they've driven down to penny stock level, you'll see that. I mean, even AMC is a good example. They drove it down to $5, and then it's kind of stuck right there at the $5. It's almost weird. It's almost like it was planned to get right down below to where it's considered a penny stock, and now it's just hanging out in that area. So again, this is not going to be a whole thing just on that, but I know that you guys wanted to get me get a rise out of me, and you did.
That's why I control this agenda. It's really just how mad can I make Darren every day, and how many times can I talk about Bitcoin and Tesla?
But we don't have time.
Talking my book.
Yes, but we don't. Yeah, we don't have time, obviously. There's not enough memory on the disk drive to talk about as much as I want to about this. So, because I've done 3 years of talking about it, but we'll see what happens. I mean, hopefully, what is happening is there's a worldwide movement to start challenging, at least, and not just virtue signaling, but challenging these guys who are really circumventing regulations and making things happen in the market just to get the money back at the end. Which, make money both ways. Go for it until you get stopped. That's all I say. Anything else you guys want to say? That is not financial advice. Royce and Dan, anything you want to say back to the ape community or to us or to?
Oh, yeah. So,
okay, all right. Give some levity. Give some levity.
Levity. Sure, why not? I think, basically, if you don't point the finger, if you don't have a smoking gun, if you don't have a scapegoat, basically, you don't scare people. Like, I learned something. It's a horrible, horrible thing that I learned. When my mother-in-law started talking about buy Bitcoin, I knew it was time to sell. Right? So if you make a scapegoat, you make it where basically all eyes are on that person, all the other people who are too afraid to do it will stay away. While the other people are like, no, it's still safe. But once everyone thinks it's okay, then basically you get amateurs in the market, and then all kinds of chaos, and you have, it's the wild, wild west out there. So Should they make an example of him? Maybe not, but you have to have an example. So might as well be.
And it's a very small one at 16 million versus the trillions and quadrillions that have probably been made on shorting.
Once again, a drop in the bucket. In a $7.3 trillion a day market, we're going after $12 million nobody?
Yeah. A very vocal one too. And Dougie Large is well known for talking back to apes online. Actually, when they post something, he actually will get into the chat and talk to them and further drive them down emotionally. It's kind of fun to watch, but it's kind of fun to watch him unravel too. So it'll be fun to see what happens here if he gets involved with the left. And that's what's happening is Andrew Left, they're saying now is going to when they start investigating him, he's going to give up people. He's going to give up people left and right in bigger positions just to try to not be. But I still say it's all virtual signal. Anyway, Daniel, what you got?
Darren, has he been in your DMs and beat you down? That sounded like a personal.
No, I did have one. It was a guy out of Nashville. I'm not going to call him out, but he was the manager of the fund, and he was one of the ones that was shorting AMC quite bigly, as Trump would say. But he actually
huge.
This was in my canceled X account, by the way. But he got into my DMs and actually we went back and forth at it. So it's like, why are you talking to me, this low life guy that has, X amount of followers, but he jumped in and made sure he wanted to say something about it, which only gave me more validation that what we're doing. Cause if he didn't answer and he just said, whatever, they're stupid. Then he had no reason to answer me. Anyway, that's all I'll say with that. So anything else, Danny?
You're a celebrity.
You know what they say, Darren, you'll never meet a hater doing better than you. But
the cards are stacked well. They are the house odds.
No, I mean, my only take on this is that, like, people being on TV and selling their book just kind of is what it is. It's just how modern markets kind of work. And, with, social media, people are going to publish their positions.
Right.
And in my opinion, if this, especially when it comes to short selling, just because it does, can ruin companies, can have people lose their jobs and whatnot. And if the company is legitimate fraud, then I do think short selling is okay, right? Like, to expose that and take that company out is good if they are doing harm. But if they are short selling and then manipulate it and a company is harmed for no reason, and that short selling, company and report doesn't have proven, research or whatever they need behind it to validate that short selling, I do think they should get in trouble. Now, is him talking on TV that? I don't think so. Or social media that? No. But if Bill Ackman, when he shorted Herbalife, if it turned out that they weren't actually a multi-level marketing scheme, which they are, and they're still in business, in my opinion. But if it turned out they weren't and they just sold, protein powder to GNC, then his firm should get fined or in trouble or whatever.
But what they're accusing Left of doing is taking a $2-3 million short position, having you're talking about, yes, exposing these fraudulent companies, and I'm all for that, but exposing these fraudulent companies, getting that information, then taking a $2 to $4 million short position, then exposing the truth. So the price goes completely down. You already know the answer before you're putting it out there. And then the stock price dives, and then exiting your position. And then all the time, or the opposite of it, where you essentially say, I'm going long in this position and then stock price jumps, and then you immediately exit. That to me is vastly different than.
Look at my board.
Yeah, no. I mean, if you so I guess if they're if he buys it day one, talks about it day two, and sells on day three, yes, that is obvious market manipulation, and he should get in trouble for that. But if he buys on day one, talks about on day two, and doesn't sell till day 90, that's holding a position in my mind, and the market gets to decide if that short is correct or if it keeps going back, right? You could say for Tesla, people hold shorts for a very long time and they all got crushed, and it's fine for them to talk about that as long as they don't, I'll call it the 3-day pattern kind of thing, in my opinion. Because at the end of the day, we have people talk on TV, post on social media, and it is what it is. And it's kind of, as long as it falls into an investment category, I think we just kind of have to accept modern trading for what it is.
So now I'm going to ask you a $1 million question, Daniel. And
Okay,
what happens? You do it. You advertise it on day one. You say you buy it on day one. You advertise it on day two. You sell 3/4 of it on day three. So you still have some there, but it's less than what your profit was.
So like what you sell,
Is that manipulation? Is that because I'm like, you're still holding the position?
Are you saying you sell to like your break even point?
You sell 3/4 of your position right after you tell everyone to buy.
Yeah, I mean, you probably shouldn't be allowed to do that either. Like, for the pattern day trading rule, you can't sell half of the position and still be like, oh, well, I still hold half of it. Like, so I didn't technically break it, right? There probably needs to be some kind of stipulation around how they can trade it.
Nothing says I still own that, and that's a true statement. But if asked under oath, I still own that. Yes, I do. But that decreasing, and that type of manipulation, that's the part that it's under my skin. All right.
All right. So I want to wrap this up. Here's the deal. A lot of this shorting started when we got the jabs, the COVIDs, all the businesses going out of business. So, hey, I have no doubt. And some of it was probably should have been done is the funds got together and said, okay, we're going to make money taking this company. We'll just say AMC. It's a movie theater. You can't even go to the movie theater. So let's make money driving this out of business. So that was the idea. Same with GME. So they got all their money together and let's short it to hell and back. And we're going to not have to pay for these shorts that we put our money in up front, except for the interest that has held since then to have the shorts. And what happened is the economy came back quicker than was expected. And some of these companies like AMC and GME, thanks to us dumb apes, we kept it alive. We kept it just above board until everything bounced back. So now they don't want to pay the pauper. They put all that money in to drive it out of business. 100-year-old company, by the way, AMC. They wanted to drive it out of business. That was the whole plan. I have no doubt about it. It's not out there saying that.
Taylor Swift? What about Taylor Swift? And
that's my point.
Giant, hey, I'm going to save AMC. Let's have concerts at AMC.
Which, by the way, this is not an announcement, but Usher. Now they have Usher
coming
out in the theaters.
God, I missed Usher.
You missed my point, though, is that and these aren't the only two companies. There's been plenty that they were successful in driving out of business. They didn't have to pay for the shorts, and it was all 100% profit, right? So that was in my opinion, that was the strategy, and to a degree, a good strategy, unless they were responsible for driving these out of into bankruptcy. That's where I have a problem. It's like there's a line there. And AMC made it back, and they're mad about it. They're pissed about it because they were not able to bankrupt it. And I have no doubt that's what they were trying to do. So now they're trying to work their way out of that. So here's a couple of things, though. Short and distort is illegal. It is in the books as being illegal. You just have to prove it. Second is pump and dumps are illegal. You just have to prove it. But to prove it, you got to have regulators that will dig in and dive in and actually take the time. And I don't think the motivation is there to do that, in my opinion. Third is there is a short sale rule, which finally was enacted. And again, virtue signaling or not, I mean, you can put a rule in all day. But if it's not followed up on and regulated, then it doesn't matter. It's just another rule that gets circumvented. But it starts, by the way, and if you want to see change, if it's supposed to happen, it's going to be 2025 in January. It's next January. So what you'll see is things
under new administration, under what's going to make it January? I need to know.
That's the date that it becomes live. So and by the way, the funds since then have all been fighting it. Ken Griffin came out and said he was fighting this rule because it is a rule for transparency that you can go back and that these guys have to actually report their short positions and report them after 30 days. And if you cross a certain percentage of, and I won't get into the details, then you have to report it. So they haven't had to do that in the past. So this is a new rule that is enacted in January of 2025. So guess what? A bunch of apes are going to hold their stuff till at least January, and then they'll find a way to circumvent it again. But anyway, that's what's happening right now. It's a worldwide movement, whether it actually be real or just virtue signaling, which is how I started this off, against short selling. And Warren Buffett, hey, he's on our team.
Yeah, but what about the accredited investors, Darren? What about the accredited investors, where basically, if they know that they can move the market, the SEC has basically made them register because they have so much money to move the market. They have ways of just saying, you know what? Okay, if I can't do this, let me go to a dark pool. Let me go here. Let me go here. Let me go here. Let me devalue, basically spread out my assets across the Fidelities, the Chase, the wherever, and basically to say, okay, I sold upon my position here, here, and here. All they're doing is spreading it out, so it's harder to detect.
That's exactly what I'm talking about. That's
what
I'm inferring here is that, well, because there's a thing called the CAT system, which we won't get into, but the CAT system is supposed to allow you to track origination to the endpoint. But like you said, I mean, people get paid way too much money to circumvent and learn how to do that. And so there has to be some type of worldwide movement, which is starting, hopefully, to start challenging this and not just let them then just bankrupt all these companies.
On Daniel real quick for a second. Bitcoin can probably help with that because the ledger, wherever the funds originate from, even if they go out and are spread across multiple brokerages, those coins still have IDs, have addresses, so you can actually see who went where and what they got used against.
Yeah, there's a company called Paxos, which they'd have the only fully gold-backed crypto currency.
Yes.
And they are working on a technology, I think somewhat in tandem with the SEC, for a T+0 blockchain for stocks.
Yep, that'll do it. So that basically you have an instant ledger of all of, JP Morgan's holdings, all of Daniel's holdings,
Mm-hmm. I have a hard time believing
it can be properly policed. Otherwise, yeah.
Well, I'm one of those that thinks they already know. They're just not. I mean, that there's a way to find out where it originates if they wanted to. But I mean, the 82K agents that we just hired for the IRS should have done that for the SEC.
Now I'm going to get us canceled. The SEC, you've never found a more wretched hive.
I'm sorry, the three-letter words, the three-letter agencies. I'm sorry.
Oh, what? Nothing.
Let's move on to this is a surprise for me. Let's move on. I thought maybe Daniel, this would be one of your guys, one of your men. I love him. He's a hero to me, Bill Ackman. But listening to what you wrote, I'm not so sure about this because you're talking about, and you almost seem like it's sad that he had to pull his IPO because of people not being interested. So I'm gonna let you take this one, by the way, Daniel.
All right. Well, first of all, I'd like to say, I titled this section "Billy Boy Got Cold Feet."
Yes.
And if you've seen Peaky Blinders, one of the brothers calls his son or his brother goes, "Oh, Billy Boy," and so it just makes me think of that every time I see Bill Ackman.
I got you. So you really love it.
But no, I thought the interesting thing for this was that somebody like Bill Ackman, who runs such a huge fund, been successful, blah blah blah, when he comes out with this closed-end fund and he wants to price it at 24 billion, and then he brings it down to 4, and then it goes 2.5. And then somewhere in between, he had some letter come out to investors where now the SEC's like, you got to wait. We got to investigate this because we don't know if this, you were allowed to, kind of send this letter. And I just find it really interesting that someone like that would, essentially price an IPO of something where they weren't, kind of assured of the price, and then just get demolished it by a fifth of the original price. And it just seems kind of suspicious.
No.
Of I was like, wait, how do you go from 20? Right? Sorry.
That's if they never IPO, they never got anyone's money, right?
Nope.
Well, that's what you're saying is in the letter that they have that they're investigating currently, he goes off and touts all of the various investors, and which is how it got attached, and received publicly. It was supposed to be a private letter, but he goes and he essentially, to some of the major donors, goes and like touts all of this money that he claims that he already has and all of these promises of investments.
That sounds like a solicitation to me.
Huh?
I said it sounds like a solicitation to me.
Essentially, yeah, which is why it's so controversial and why everybody's kind of diving into it, because it's not something you're really supposed to put out, and it was apparently not supposed to be put into it was apparently not supposed to be attached to an actual like shareholder letter, but it got
it was sent to, I believe, investors in his primary fund, his hedge fund, right? And it was like you were saying, a letter stating the investors of this close-ended fund, and like talking to them about that, which I don't remember the rules because I didn't work at a hedge fund, but there's very strong rules about when you have a new fund coming out, what you're allowed to say, how you say it, who you say it to, following prospectus rules, which it sounds like he wasn't doing.
Somebody called him out somewhere. And I think it would have been just fine, but somebody actually brought it up and said, hey, this is happening. And so then they had no choice but to investigate it. That's my opinion. It's just like what we just talked about, the short selling thing. It's like suddenly there seems to be some regulation possibly going on now. And like you said earlier, it's going into an election. Now, all of a sudden, everything is actually getting challenged. So it'll be interesting to see where everything goes, even with all M&A, with IPOs, with all of these guys, venture capitalists, to see if there's actually someone actually going to lay the law down harder than before and investigate it more. But again, I think you need a lot more people at the SEC, because even he said he doesn't have enough people to do all the investigating that needs to be done. So, but he probably won't be there if Trump gets hired now. So.
Like the letter was so off the wall. Like he even went so far as to say, because he's got that, it's what, Pershing
Square USA was the IPO.
Even trying to prop up or justify the pricing of his valuation based off the fact that Pershing Square Capital Management could turn around and buy like Pershing Square Holdings, which is another one of his own companies that he said was undervalued by like 20%. So that was going to help boost the stock price. And there's all kinds of ethical issues there.
Well, it would be the first time a valuation was incorrect, right? From what gets promoted out there, and someone just went through a fight in some candidate for president just went through that, right? Overvaluing stuff, because it was part of what was the game. That was part of the game in real estate, was to overvalue stuff to be able to get leverage other ways. So, I mean, that's happening obviously in the IPO market as well. And I'm just guessing that he knew ahead of time, after he had a big investor pull out, that he knew that there's no way he would be able to justify the $50 a share, whatever it was, I think $40 or $50 a share that he was going to IPO at. And finally, he just said, well, just screw this. He went from, to wrap it up, he went from touting it to pouting about it. And we'll just leave it with that.
Oh, there you go. Yeah, I'm going to jump all over that one.
From touting to pouting. Yes, Bill Ackman. Let's move on to, oh, man, I hate this. We talked about it earlier when we started off. And it's this 3-year conversation about, are we going to have a soft landing? Actually, at least they went away from saying, are we going to have a no landing? I love that time when they went through for about 3 or 4 months. Oh, now it's going to be a no landing. It's just going to be business as usual. At least now they're saying soft again. So, I mean, Royce, you're the one to talk to about this. Are we going to have a soft landing or not? I know we keep talking about, are we going to have a 30% pullback? Are we going to have some are saying 50% pullback now? What's going on, Royce? What do you think?
Well, we've had so far about a 4% pullback based on where we are now. And that's based on S&P 500 and based on QQQ, basically using the ETFs as a high water mark for the current all-time highs. So from the all-time highs, we've had about a 4% pullback. Is there more to come? Potentially, yes. Where we are sitting, the crux or the hard part is basically, I think it's going to be a soft landing, but that soft landing, the closer we get to the election, the more uncertainty and the more anxiety is going to start building in people's portfolio and in their decision-making processes. And basically from that, I am expecting the market to overall become much more volatile the closer we get to November. And even so, even in the crypto market, where normally basically you have the Santa Claus rally, but for crypto starting in early October, I don't think it's going to happen this year, mainly because it's an election year. I think a lot of the stocks have had a very good run. It's like 7-8 months of nothing but good. Well, except Tesla, but Tesla's coming back this third quarter, right? Mm-hmm. And so it may be a little bit of a rotation. So a lot of the people that were talking about the small caps, I think I saw IWM actually up today a little bit, about $1.29, but everything else was up as well. So volatility has made it back up. I mean, the VIX has made it back up to the $16 range. Earlier this year, we saw it as low as like $10 or $11. So that means there is some volatility to be had in this market. And I think the longer we go, the closer we get to the election, I can see the VIX actually getting maybe back up to 20, 22, maybe even $25 level. So
okay. We certainly need something. Like something's got to bring some prices down.
It has to shake. It has to be shook. And I have a couple of stats I researched a little bit, just going back and looking at the past. And this was Dow. The Dow doubled between 2003 and 2008, right? Going into the great financial crisis. Then it tanked below what it was, or it tanked below what it was before that happened in 2009. And then since then, it is 4 times since then. So there has not been any real drawback since that great financial crisis. And that's been 15 years ago. And what I'm saying here is that it's due for something. It has to. You have to reset somehow, somewhere. And some of the
resets, but basically people want all their medicine all at once. Like 2008, you had to pay the piper. You had to get out there, and basically everything was burning. Real estate was burning. Everything, derivatives, all the things and banking, everything was burning in 2008. Well, in 2015, we had a pullback. In 2016, we had a pullback. Christmas of 2018, we had a pullback. Right going into COVID, all the way up until about March 18th of 2020, there was a pullback. So it's not like it's just been to the moon, as they say. There have definitely been some breathers that have happened in the market that basically has allowed us to get this high. Right.
Well, the drawback obviously last time was October, right? Last October, I think.
Yeah, right before the rally. So right at November 1st of last year, that was the end of that pullback. And every time it pulls back so far, you push probability. Probability will push back, and next thing you know, we're in another rally. So
we just haven't had that major
give up all the ground. It's gained. As long as you keep gaining ground, eventually you'll overtake the enemy.
Well, I mean, you said it yourself, Royce, and this is what the narrative always is on CNBC and all the channels, is they'll say we drew back 4% from all-time highs. It's not. I mean, it's always based off of the all-time high. It's not based off of the prior history. But that's
where you have to market from. That's literally
where I know. Yes. Yes, but that's, to me, it just hasn't busted like it normally does. Every 7 years or so, 7 to 10 years, we're missing something here somewhere that keeps getting pushed forward. And as I was talking about before, or I referred to it is folks, look at your Fed reports. Whatever you're doing, look at your Fed reports, and they're the ones that show you, and you can compare this specific information to this information, and you can get a lot of interesting things out of it. And some of the reports are reckoning back to comparisons with the Great Depression on things that are happening. And some of the reports are reckoning back to 2008. And boy, it's funny to watch those guys on CNBC. If you even reference that just a little bit, they just, they're all over it. Stop the press. We can't talk about that.
Hey, you know what? You never want to yell fire in the theater. Right?
And that's exactly what it is. Yes, it is a fire. Absolutely. But if you look at your Fed reports, you will see lots of fires there that are not being addressed. And I think those are what's going to bubble up eventually. And it's just a matter of when. I do know that the month that keeps being talked about for the last year which means it probably isn't that month because that's what they do.
Really?
It's September. It's September. I mean, Green Day said, "Wake me up when September ends." I mean, we're there. And you know, last time it was October when it happened, the drawback. So somewhere between those 2 months, it seems
already
like
called July. We've gotten our pullback for July. I got my 4%. I don't know about you.
Yeah. So the pullback, let's say it happens in September. That's when some interesting things are happening in September. So it'll probably be September or October. September is when they're going to talk about the rate cut. So if it gets really bad in September, like everybody's talking about, it could, not everybody, some, the bears that are left, the little bears that are left, that would make sense. And then they might bring down a 0.5. They may not do a 0.25 reduction. They may have to go down to a 0.5 or 1.0. Who knows? I mean, because everybody is talking about 3 cuts.
You're crazy.
I'm speculating. I know, but I'm just saying. If the market pulls back 20% in September, you don't think they would take a 0.5?
I think it has to do at least 35 to 40% for you to see 1 to 2 points in a single cut. Because they've gone up. It's their step about 0.5. That the highest or fastest I've seen them basically raise the rate is 0.5. So
that's true.
I mean, you seriously have to do something horrible to get a full point out of the market.
Well, that black swan could reveal itself. We don't know, but you're right. I think it would be 2.5s if it got really bad. What is it, September? And then is the next one November or December? When they meet again or that.
Oh, I have no idea.
I forget the calendar, but they had been talking about 3 cuts at the end starting in September. So that means there must be 3 times. So within those 3 months, maybe we take a 1 point reduction in the rate. Who knows? I mean, it's all speculation right now. I think it's
a new tinfoil hat, extra pointy.
Extra pointy. Let me.
Extra pointy.
There we go. All right. So, all right. So I've got my blood pressure worked up twice now about 2 different things. 3 if we talk about Ackman. But let's move on to some crayon work. I think you have. Or did you guys have anything else, by the way, on this? I mean, we kind of stretched it out a little bit here, but. Anything from the banker or the institute? No. Okay, good. Let's go into the. We're going to do some crayon work now. This is a good old Memphis company. We love Memphis.
We love Memphis.
And so here we go. AutoZone. What are you talking about here?
All right, let's go take a look at AutoZone. AutoZone has been doing great things over the last few weeks. We got a buy signal from Pips roughly around the 11th of July when it was valued at about 2,800. It's made all the way up to 31.33. So roughly around 2,800 all the way up to where we are. How much further shall we go? That's a very good question. The only thing that's going on here on the 4-hour chart, probability is decreasing. See that cloud? Those candles at all times stay within that nice, pretty cloud, never leave it. Well, when the cloud starts to run out of space, that means volatility is coming. So anytime you see it get narrow, watch out for a big candle up or a big candle down. So the fact that we're getting doji candles and the cloud is shrinking and we're sitting at the top of the range, I think there is a potential fall that's coming for AutoZone. That the major thing that AutoZone has to look out for is its support and resistance line sitting at about 30.61 and 30.44. The other major thing to also take note of is that AutoZone has been in a buy trend for a very, very long time. So, minus the fall almost since May of this year, it's been basically from 2,700 all the way to where we are now. It's been going up. Well, with that being said, this buy trend is now in danger, and there are several mile markers that could potentially cut this guy in half, if not a third. So watch out for that. 29.21 is 1 point that basically, for the buy trend to successfully continue, it needs to make it down to about 2,900. The apocalypse band, that's the one that predicted the 2008 crash and 2000 crash. It's saying 25.81 is the price of blood today. So keep your eyes out. That's almost that 20% correction that you've been talking about, Darren. That's all I got.
All right, I got something too. By the way, that's after the bell, crayons and charts with Royce Wells. Let's. I need to record that. We have lost our Singaporean. It looks like
He's this point. I am out.
But we'll keep talking here.
I'm here.
He's back.
There
All
you
right.
go.
Oh, that's because we had the screen switched. He was trying to be sneaky. It's those millennials. They try to be sneaky. They thought, well, the screen's gone, so I can go have some popcorn.
I gotta be honest. I had to go get my Red Bull. We are not sponsored by Red Bull, and we are not financial advisors. All right. Oh, and there we go.
Maybe we are sponsored by Red Bull.
They're beginning to wonder.
They're a private company.
Where's my cut? All right. So let me ask you this then, Royce, and because this is what happens is when a company sees that they're about to, and especially a high price company like that, is it the possibility of a split going to happen with these guys to try to offset?
Has been announced, and I believe
I know
earnings that are coming up at that little lightning bolt at the bottom.
Right. So I'm just saying it. This has happened lately to several companies.
Preview what to expect. All right. So from where we are, good question. Will they have good earnings? Will they have poor guidance? Who knows? But from what my charts are saying, there is a day to pay the piper coming, and AutoZone, its number might be in the cards.
I'm just saying, I think that's what they do. They want to bring it in down to the level that the retail traders can jump in, just like Chipotle and all these others did. And that's a awfully high price point. Even if you do the partial shares, etc., which Robinhood folks love so much.
If it were me and I were leading this company, I'd do a 20-to-1 split.
Exactly. That's where I was going with it, because I think that probably will happen. I mean, I don't know. I'm not an advisor, but
so
I think that's
would
probably
bring it
going to
back
happen.
down to about $150 per share, and everyone can afford that.
Bring in a lot more people. Absolutely.
Yep, absolutely. All right. NVIDIA did it. Why not?
You heard it here first, guys. I'm sure we're not, breaking any knowledge barriers here, but you heard the possibility here first. We'll see. We won't bring it up again if it doesn't happen, but if it does, we'll bring it up. All right, so let's go on.
I mean, as long as the trendy thing to do, it's only going to prop up the price just a fraction of a hair, because I mean, the only people that catering to by bringing the price down like that will be retail, and retail is rarely, if ever, 20% of market volume.
But if there's a way to play it, we all know this. If the funds can play it and squeeze some more money out of retail that way, they will do it, and so it'll be fun. It'll be fun to see, just like they've done with the other splits. So let's move on to. We've been trained for 3 years. Let's move on to the Josh's segment here, I guess, because we had a little bet on a little wager to the keys to the executive bathroom, and Josh gets to experience the gold-plated flusher this week, because he once again won. And not only did he win, it stayed in his channel all week long, but he also, this is his three-peat. So I mean,
let me go take a look at this.
Now he's doing.
Hold on.
Is that a gang sign? That's a bank gang sign, isn't it? Three? I don't know.
That's like when basketball players make a three.
You're not Memphis, Maine.
3-6.
All right, 3-6. Right.
I don't want to know.
Memphis. All right. So do you what? Are you going to pull up? Is this what you want to do? Did you type this in?
Yeah.
Seriously?
I did.
Wow. Okay. So he wants to do the NFT. I mean, DJT as his pick for next week.
Really? This thing has had such a wild amount of volatility. I'm really, really interested to see what the probabilities are on this one.
Jeez. All right. So here's what we're going to do. As far as he's going to select the channels, and then Daniel gets to go first. Royce second.
I won't even be here next week.
Oh, you're not? Well, then forget
I'll
you.
I'll be on vacation.
Yeah, okay.
We know I'm going to lose anyway.
No, I got a way to fix this for you.
I thought you were on vacation this whole time.
I was about to say, you're already in Singapore. What other vacation do you need? Like,
you going to Vietnam?
It's not like I'm in Bali. All right, like relax.
Vietnam.
I mean, but I assume you're about to be.
Yeah.
Well, I'm going to the Philippines.
Oh, right. that poor you. Jeez. Golly, your dollar gets
no. It'll be rich me, because my money goes really far there. And I can actually afford to live there.
You can run for mayor.
That's a place to visit.
It really is. So, do you have the chart?
What for Dow Jones or not? I'm sorry,
No,
Donald
that's
Trump.
actually
Yeah.
We might get canceled in this segment.
I know. Let me go back over there. All right, so let's go up. Let me turn off my 3D temporarily.
All right, I have pulled it up. Trump Media and Technology Group Corp. What will it possibly do in the next week between now and next Wednesday so that we can do our little friendly wager on it?
Oh, okay. Let's see. From where we are, it's burning. It's burning. It's gonna burn badly, actually. No, it's gonna be fine. It's going to be fine.
Wait a minute. No, will it be beautiful? Just beautiful.
It's gonna be huge. It's gonna be so
huge.
Huge. All right. It's bigly gains.
Bigly, yes. That's a bigly downfall.
Oh my God, the range on this guy is absurd, right? So the downside potential is down at $18.64. The upside potential is around $54. What? No, this guy's moving way too quickly. All right, I'm going down to a 30-minute time frame to see if that helps.
Volatile.
Yeah, I want a 3-week range. Don't give me the world. Give me, something that's a little bit more hardy. All right, there we go. That looks more sane. All right, so from where we are, 23, and I want to say around 30. Let's go 32, 33. Let's go 33. 23 to 33. Everybody gets $2.50.
Wow, you tighten that up.
Oh, I know, right?
That's kind of skinny. Okay.
What's the channel again?
It's from $23 to $33.
Well, that would be because again, Daniel's not playing along, so that's roughly $3.
$3.30 or $3 a piece.
33, yeah. Okay, we'll say $3
a piece. So from where we are, 3 up, 3 down, and 3 down again.
Okay. So actually, you get to go first, Royce.
All right, I'm picking exactly where we are and below. So basically, $28.99 all the way to $25. To $25, yeah.
So 25 to 29.
All right, 26. Would that be 26? Yeah, 26.
It'll be 26, yeah.
Yeah, 26. I won't rob you.
So this is easy. I mean, because we're picking the ends, and the ends go infinity. So I'm gonna say 29 plus or 2901 plus. Then.
All right.
You just gifting me this one? Like, are you?
I love it. Me versus the apes. So just
hey, that's what you want, though, right? I mean. I think this is what you wanted to see this happen, which is for DJT to go down even further. So I think you're getting where you want to be there, Mr. Banker.
I'm loving this. I'm getting yeah. Give me the under.
He's loving it. All right. So I had a feeling. So we all are in our $3. Well, Royce is the only one in the $3 range. Now we are way above.
26 to 29, and then basically 29 and above, and then 25.99 and below.
All right.
So yeah, sandwich me. Go ahead. I'm fine.
There we go. What does Jim Cramer behind you say about it?
Oh, he's saying bye bye bye.
Say bye bye bye. He does say sell too, depending on position. Yes. Just joking. All right. So,
no hard feelings, Jim.
All right. The millennial said, "Hey, I can just take breaks whenever I want to, and just cut out." So he's back.
I had an emergency.
His Apple phone was about to lose its charge. He had to go plug it in so that he would.
You didn't want to hear that emergency. Trust me. It was an emergency, I assure you.
We're going to take a hard stop on that conversation.
Yeah.
That's what I'm trying to tell you. You don't want to talk about this one.
Right,
the other one, I'll give it to you. That was me. I'm like, I'm going to get up, get my Red Bull. They can't see me.
All right. I'm the one that throws poo, but we won't go in deeper into that. So let's
always there are two.
We're too far. This is too far. Let's wrap this up. Hey guys, I appreciate you guys being. I appreciate all four of you, but just as we get used to the four of us, we go back to three because millennials have to take vacation. So we will see him in what month or what is it? What's millennial vacation?
What do you think? Darren, what do you think we are? A German company?
No, but millennials always negotiate their contracts when they come in, and they throw, well, I'm only going to come on board if I get a month at a time. I mean, that's right. Isn't that what you guys do?
I don't think that's in my. Maybe I'll talk to Royce about that at the beginning of next year, but I didn't work that in this time.
Sorry, Royce, for bringing that up. All right,
you know what? All right,
negotiations,
canceling everybody.
There you go.
I want all of Darren's vacation that he doesn't use, because if not, it's just wasted.
I need to.
You know what? I really like the way you think.
My blood pressure's going up every week. I need vacation soon, Royce. Vacation soon.
I mean, it's on you for not taking it. So, just give it to someone who's actually going to use it.
Look at him. He's wanting me to do it, so that he'll have to do all this work for a week or so. All right.
Hey. I would have happily done this if we had bought one of the podcasting tools, but your goddamn open source
Here we go.
Hardly worked in the beginning. I ain't doing that.
There's a learning curve. So you just got to have that learning curve quick there.
Oh my God. It's so painful to pay $20 a month for stuff that just you plug and you play and beep, bop, boop. You hear yourself all the time.
Yeah, because AI always works. All right, so let's go on and move on and close this show up. Jeez, we're already going over an hour. I prodded him. It's my fault. So, yeah, cheers to everyone. Cheers. We'll end it like we began with cheers to everybody. And we will see Singaporeans back in a couple of weeks, and the rest you'll see the three of us hopefully next week. And this has been After the Bell by Arbitrage Trade.
Yes. See you in Philippines.